Hi, Planty here. Welcome back to the Alpha Capital YouTube channel. We've got a new one for you, Bulls versus Bears, and I'm here with Billy,
Hello, nice
one of the top traders we've got here, and we're going to discuss what we think about some charts and take each other on about where they're going to go.
Let's do it.
Let's dive straight
we
in.
go.
So what have we got here then?
So I'm seeing overall bullish trend. I'm looking.
Why is it a bullish trend?
Just overall going up, you know, higher highs, higher lows. But from what I'm seeing, I'm finding this last candle here quite interesting because you've got that solid wick rejection on the 4 hour as well. So I'm wanting to see what it could potentially look like on the smaller time frames there.
Which we'll have a look at in a minute. Yeah, so when Billy's there, he's talking about the uptrend. If you come to these charts, it's sometimes difficult without putting on the extra indicators, but you've literally got upsloping channel. If you put channel lines in there, to me, that I agree with you, that looks like an uptrend.
Definitely. This is really difficult for me, I'll be honest, because I don't trade off naked charts, and I think anyone who can is talent on its own.
It's like those things that you look at and you see the letters in
there.
there.
Absolutely, yeah. I trade with supply and demand, and then I also use my RSI. So for me, this catching a reversal or understanding where it's going, it's quite difficult. But for you, how is this for you? Can you?
Well, again, like, I try and encourage people to go straight to a long-term chart, but then try and draw the things in as you go along. And I'm looking for lots of confluences, lots of things happening at the same time. And again, I have a background in Elliott Wave, so I'm instantly looking for those patterns. I'm looking for sets of 5 swings, and that'd be 5 swings up and 3 swings back as consolidation. And to me, you've got a lot of that. You've got a 5 swing here and a 3, and then we're looking how's it going in the next bit. So if that's a first move, I'm looking for the next move to be big, and we've got quite a move before it's consolidated again a 3 wave back. So to me, we're into the next set of impulses, and again, I'm looking for 5. We've got a 1 up, a consolidation, another breakout, and then a consolidation. And as you've just said, we've got a wick off, which we've got to be very careful at. It's literally put in the trading action. That could be a 5, but then you start to think, are they really there? And the middle one, the third wave of any of these, has to be the most impulsive. So there's a few of those knocking around in this. This could very much be a third wave that's consolidated and then just put in a final finish. So my first instinct is that we're coming towards an end of a move here. And again, if we had those channel lines in, we've almost tested the top and bottom of them. So I think we need a little bit more info about what's gone on in this 4-hour candle. And that's definitely why we say come down to the next level.
I'm seeing there's potentially some news that's been released here as well, just from the size of that compared to the previous 4 hours that we've got as well. And with the way the price has gone all the way up to that 2,600 level and rejected back down, all within that 4 hours, potentially shows high volatility from a news release.
Yeah, and the other thing that a lot of people forget on gold is that it has auctions, and particularly that's happening at the moment at the London bullion market, the LBMA. That could literally be the auction in price, in which case you know that it's someone's in distress and blah, blah, blah. But yeah, so pretty much like you use RSI, I use MACD, which sort of is it's a slower working version of RSI. It's more on the moving averages, and I'm looking for peaks to be in line with those third wave breakouts, so that the last one, I want to see divergence. I want to see the MACD dying as we hit new highs, and then I know we're close to a turning point. So that'd be the next overlay that I'd have on this chart, but obviously we haven't got it. We've also got declining volume into the peak, which again is suggestive of a turnover, I think. But I think we should dive down.
Yeah, let's go to the lower time frame and see what's what.
Hit the right hand button. Right, there you go. So the extension of that is which has happened first. The breakout to the tops happened first, didn't it?
Yeah. So now I'm seeing it's interesting because you've got that sharp bit of volatility there, and you've got almost a correction back to the downside. It could be the start to a downtrend, is what I'm thinking here potentially.
Yeah. So again, I'd love to have the momentum indicators on here just to show how much that has actually turned around. If that is a turning point, we've had an impulse. You'd tend to have a consolidation and then another impulse. Most corrections happen in a 3-wave cycle.
Yeah, it's definitely a wake-up call for me looking at these naked charts. This is it's completely different to how I normally trade. Definitely.
So in my world, I'm thinking zigzag straight away, and what that means is when you have a big impulse down and you have a consolidation, you're going to get a similar impulse down before you finish it off. So, but we are tracing out. So I think this has got the potential to have up to a 50% retrace, perhaps, and then die, and then you're going to come into a lot of sell volumes in here, which you look at for your support and resistances. And now that we're coming down the time frames, I think they become important.
Yeah.
So even though it's blind at the moment, you could probably point out a few for the viewers where you think it might be running into a bit of resistance. Well, again, what I do, just like we were on the upside, because we're in, I love to have the trend lines in just to make that chart just come alive. So you've got lots of peaks. It doesn't necessarily have to be a horizontal line. To me, the diagonals work. It's a sloping line in the real world relative to chart. So I think we're definitely going to run into both these peaks here are going to hold this chart for the minute. Very, very impulsive moves down, I think. So again, if you're shorting it, I'd be putting stop losses in around this area, probably just above it.
No, I see that,
particularly with it being quite thin volume and wicky. So I'd get the fibs out straight away because this is a consolidation. They tend to focus around a 50% retrace and then go again. So that's, if we're allowed, that's what I'm going to say. I think we're going to have a potential rally for another, what are the numbers? I'm getting old. I'm too old for this. Look at this. We're at 25.59. So I think there's a short time buy up to about 25.75 and then it sells off again.
No, I see that as well. You can come up to about here and reject off that and go further down.
That's the base case. Are we
agreeing
on this
with that? I'm agreeing on that one, actually.
Good luck.
Yeah, I see that
roll
as
it on.
well.
So there you go. We're having a little argument up and down. Impulsive. It wants to come. This is the danger.
There you go. That's that move up.
Where's that gone to? That's only gone to 65, hasn't it? So we've hit 25.75. What's it going to do? It's going to make us look silly. That is always a danger. Well, we've stopped out because we've hit that 75 level. I'm quite happy, but we're looking at it again. Are we going to reject off the wick level? But we've stopped. So because we've not taken out the high, it's a consolidation pattern that can still come down and do a flat, and have equal legs. I wouldn't be surprised if that happened before it went again. It's just, to me, having had such an impulse down, there's quite might just have one more up and come off, but obviously we've killed that one. We've both got stopped out.
There we go. Yeah,
shows you. But the thing is, this is the whole point. We've set it so that we stay alive. We were concerned about just how volatile this movement was there, and it's still not been confirmed as a breakout because we haven't had a higher high yet, and that could easily still carry on retracing. But we're safe. We're still in the game. We had the right idea. We knew where the pitfalls were, so that to me is a win. We'll take the draw.
Agreed. Yeah.
Right then, Billy. Chart 2. What do you reckon? This is the euro, US dollar.
I like the look of this one. I can see a little bit more of what's going on here. So on this 4 hour here, I'm seeing a level down here of demand. Okay,
yep.
You see that?
Why are you saying that?
Because I've got this level down here where price has reacted, gone to the upside.
Yep.
You've got this nice wick that's come down here, it's reacted nicely on the 4 hour. You're starting to see this uptrend, this nice impulse to the top.
And I like to see lots of wicks because that shows you that there is demand hidden in the book.
Exactly. You got that low there, and these rejections here look really nice. And then I'm promised on this one because this is the bottom here. So as you can see, from price making that low, it's done all of this. So I'm thinking now we're returning to this. It's the first time we've returned to this level since all the way back here. So now I'm expecting to go. I do believe this is going to go higher.
Yeah. So again, we're in this first demand that you've identified. We've got an uptrend. What does the uptrend look like to me? Again, I think we've got 3 consecutive higher highs. That suggests 5 waves, and then we've put in small degree 3 waves, a 3-wave rally, and then an impulsive 5 off. That's a classic ABC to me, which is a consolidation looking for. You should be bouncing off it. When I instantly came to this, and I know a lot of the SMC guys are coming around to the fact that head and shoulders is what you're talking about with the retraces. Yeah. There's an automatic head and shoulders in that, but we've taken out, there's a neckline. We've just negated that. Because if that had held, we're going to come down the same amount as the highest peak, but that we've probably seen that off.
If I had my RSI here, I would have a lot more confidence because I'd be waiting for, I'd first hit that.
So what would you want to see on the RSI at these
What I'd be
lows?
wanting to see, so I want to be seeing oversold first of all. That's
So what's that, below 30?
Below 30,
or
further than
you
30
set up
level
on
gap.
30.70, some do 28,
30.70.
don't
So I'm waiting for the 30 to get broken. I'm waiting for that tap in, and I want to see a cross on the divergence, and then see it go up, and then I'm in upon the candle closure and seeing that nice cross, and then I'd be in that. That'd be a solid entry for me. It'd be an A-star setup with those all those confluences all aligning.
So similar to the MACD that I'd be looking for, because we've got a consolidation here. I'd like to see 2 consecutive lower troughs. Then hopefully the momentum is coming back into the actual positive as well, and you'd be looking for a crossover with the signal. So I'd go and look at both of those, RSI, because RSI concentrates on price, and the MACD is more momentum. So if you can get both of those happening at the same time, then that's really powerful. So I think we're going to agree again on this one, and I'm going to stop loss just below
that low.
Below
that's
those
where I'm
lows,
going. Yeah.
Let's try it. Sooner or later, we're going to disagree. 15 minutes, right? So we have had a breakout that has consolidated again, 3 waves. Are we doing? So I call this potential nesting. Nestings are 1-2s, 1-2s before it breaks out in that big wave. That's how I try and look at it. So I'm always looking for a breakout, a clear 3-wave pattern to a new low. We've got that, and then that, to me, I'm going to change my stop loss on the buy to the low of that consolidation now, which means that we get a chance to be a bit more aggressive. We don't have to wait for that ultimate test there, because that gives us a chance to get out. So I'm actually going to buy this, but I'm having a stop loss down here at 107. Where are we? Let's go 107.20 just to make sure we don't get wicked.
No, yeah, and I'm going to bring you back down to the terms you hear more today with the ICT and stuff like that. I see this fair value gap and this imbalance here. Obviously got a nice rejection here off of that on that 15-minute from that.
So talk everyone through that again. Where's your fair value gap and where's your imbalance?
I'm seeing this imbalance here, this fair value gap from that wick to that one. And then, so I'm seeing that, and then you got this, his price has come down here, tapped into that, and then you've got a nice up move there. So you could even have your stop loss there. I'm comfortable with putting it there, definitely. And then seeing it continue to potentially take out that high there as well.
So in old school, and you definitely that with me, that wick down there and that wick down, they're more or less the same level. That to me is telling me there's an order, there's an actual real order in the market, which is what you guys are all looking for. And some people, they call it order blocks now, don't they? But that to me is like, I'd almost call, if that was in equities, I'd call that iceberg.
Right.
Because it's definitely bounced off. It's not even put a candle in there. Someone's got a limit order to buy in that market. So again, that is why it's powerful. We've got 2 rejections in that.
Yeah, it's crazy, man, how much the terminology's changed, because
the ideas haven't. It's just how you describe it.
It's more of being dumbed down nowadays for people to kind of understand it on a YouTube video.
The thing is, you go into my world and no one would have a clue about ICT and SMC terminology. They'd all still be looking, and it'd be good for you. You're a little bit more leaning towards support and resistance stuff, aren't you?
Yeah.
So you'd do fine. Right, shall we? Are you buying? You still buying?
I'm buying. He's no good.
It's rolling.
You're no good with tech.
I'm no good with tech. I'm an old man. Come on. Oh, I'm going to get stopped out again. Look at that. See, but we still haven't taken out. You know what? So guess what?
In all fairness,
tell them.
My original level did hold.
It's the original level.
My original level did hold.
You can have that one.
Thank you. I still got stopped out, but the level held. Yeah. I'm going to take a half win there.
This is, again, when you start talking about, we've had the 3, you've had another rally, counter trend rally, and then you're putting in the final downside. So this becomes, rather than give up on the idea is right, it's just gone to a higher degree. So you know you're still in, and as our original idea was, it gets invalidated at the original low. We're still in play. You'd be sweating now.
Exactly. Like I said.
And then you've got the hand hovering over the stop loss, and we're moving it. You shouldn't. Don't fart around. You've got it there for a reason. Leave it because the trade's wrong. We've got to reevaluate it because we could have done that. This now could be a new downtrend, could be an extending downtrend. We don't want to get caught out by.
No, and that's why I trade on the higher time frames as well, because, like I said, when we saw that on the 4 hour, that was a lot more clearer to me than the 15-minute. And like I said, that level for me, being on the higher time frame was more valid. Yeah. And that is why I would have had my stop loss below that low and actually entered. I'd been more comfortable entering on the higher time frames and holding. I trade 1-to-1s personally, because I find it's just more consistent.
Yeah,
and I
like knock it out of the park.
It helps my psychology. Yeah, because I'm no good with holding trades more than 1% in profit, and that's just the way I work. I'm all right with holding trades for days upon end, but when it comes to holding high profit trades, that's where I really lose my head. So
what is it? Is it psychology of just
yeah,
seeing it disappear again? I could have banked that, could have gone again.
Yeah, I've had previous issues with greed, so I took the right measures to get rid of those habits. And I found one-to-ones are the best for me and having a really high win rate. So that's why I do it like that. And like I said, trading on the high time frames as well helps massively. But like I said, when I was on that there, 4 hour, you got that level. 4 hour, obviously, high time frame, higher confluence.
If you like holding your trades, one of the best traders I ever worked with was a guy that was forever playing around with his. So rather than having a one lot, say he's got 5 lots within that, and then as it's going up, he'll take it down to 3, and then at the bottom, he'll be looking to put that back on again. And if it goes a little bit higher, he might get more aggressive on. He just forever be playing around with the. He doesn't get stuck with just holding the one position. So it might be worth you just starting to chop it up a little bit. And you still, if you like holding them, then you're just playing with the profitability. Right, that's the second one out of the way, and I've been stopped out twice, so I need an easier opponent. So thanks, Billy.
No problem, mate.
Some good comments for us there, and I'm going to bring in Jerry now.
Planty, how are you?
I'm very well, sir. It's good to see you.
Long time no see.
From the Emerald Isle.
How are you doing?
Doing very well. So this is Bears versus Bulls. It's now Jerry in the seat, and we're looking at GJ, British pound against the Japanese yen. So we're starting off with a 4 hour, Jerry. Anything that immediately comes to mind?
Well, just
use that cursor.
Immediately, you've got obviously this aggressive breakout to start the bullishness or the bullish first wave. And you've obviously got the correction, the apex.
Yeah,
which I
very much a wick. When we talk about
wick,
wicks, that's because it's just a spike, no real body to
aggressive move, but then the initial upside, that momentum completely falters, completely fades, creates a secondary weaker top. Aggressive move back down to the API or to the breakaway zone. So what I'd be looking at there is massive volume, accumulation, consolidation, gathering of volume, orders. And you can also see from there, it's pretty much held at that accumulation zone.
So lots of really big, strong volume coming in into weakness here. And we've got a sideways channel as well, haven't we? So
and you can even see it. You can even see it as well. It pops a spike in vol.
Just look at the breakout. You've had a false breakout, consolidation, retrace, retest, however you want to talk about it, and then it's popped.
Exactly, and then from there it's just a continuation of that first wave. So it's obviously accumulated. It's gone up to take this wick, filled it. So obviously,
so we're thinking straight away there's potential selling there next time.
Well, potentially, but it's just from the higher time frame approach. You're looking at the full phase of movement, and it takes out that wick pretty much. You can even see these tops are high of the wick.
Yeah.
And then it's accumulating again for the volume. A similar type of apex that you had here, only on a smaller scale. So you've obviously broken up, you've come back down. You look at this here, breaks up, comes back down into the volume, and is accumulating.
So when was
accumulating?
You're an old man, not as old as me. when was GJ last up here?
That is, well, I'd say that was obviously off the back of yen weakness in the 80s, I would suggest. Now, I don't trade GJ personally. But we don't tend to see GJ up at 200 against the pound very often. And it would be kind of a multi-decade play. But even from that as well, like you have, as I said there, you've got the breakout, you've come back into this shorter term accumulation zone. And already, like for me there now, if I was looking at that, the perfect buying opportunity is if you've got your market profile or your volume areas, it's probably somewhere down here around the 200. And already it's broken up and gone. So if that was me now, retrospectively, be looking at there because it's pretty much rinse and repeat of the initial move. And also here as well.
Got another lovely channel here.
You've also got a V. So I often look at apexes, so A's and V's. So they're sharp reversals. So you can see here it's gone.
What other indicators do you use when you're looking for these V's?
Look at, so I would look at market profile, which is the volume areas. And then I'd also look at liquidity, which
again,
brings,
you've had, is that lined up? Is that selling into
yeah. Well, the market profile looks at it on 30-minute prints through the course of session. So it tracks day session by day session. And so there I would see, again, accumulation, V, sharp wick, sharp reversal, back into the previous range, breaks through the range, breaks to the high, comes back down, and then springs broad higher. So for me, that looks like it's still going higher. But the only thing is here is it's an unfavorable entry point because it's already done the first move, it's already done the secondary move.
We're picked at the high for the move, aren't we?
You're peaking at a range there where it's actually probably not as feasible to take an entry long because of how much it's extended out of that secondary range. So I would be hesitant. I'd still say it's going to go higher, but with less degree of confidence because it's already filled the initial wick. It's already gone higher. It's extended out of that second range. So from a risk-reward perspective, not a practical setup.
Yeah. So again, we go back to my wave theory. We're looking at this. We've consolidated here. We're in a breakout. We've had a 1. We've consolidated it in 3. It's now probably that this is the biggest impulse, the strongest impulse, isn't it, of the whole thing? That was just the initial breakout, as you said. Does that, to me, suggest 5 waves? I'm looking for the middle of 5 waves to be the biggest, and it's only just potential there.
The second thing I would say is that's obviously a snapshot of 4 hour, which is taken over a multitude of days. But you'd also want to see is how extended is that GJ trade over the last period of time. So I don't just mean a 4 hour chart like that.
I'd go back to the day chart and a weekly chart.
You even have to go back to a weekly chart to see the last time when did GJ trade at that level to see is it really expanded beyond critical zones of interest. Do you know what I mean?
So to me, whenever I trade yen, I like to trade UJ. It's all about yen intervention levels.
Yes,
and
exactly.
You know they're on shots. Where are the options?
Because you know, obviously, with the JGBs and everything going on with the BOJ at the minute as well, in terms of its shift in policy, that there can be very, very sharp turns over very, very short periods of time. And the last thing you want to be doing is buying at an extended point.
Exactly. So
for it to come crashing back down.
So for the yen to strengthen, that would be it coming off. So if the Bank of Japan's coming in and doing intervention, which we call yen intervention in the terms, you would get a very impulsive drop down from here.
Yeah. I probably, based on the 4 hour just alone, if you just isolate that, you probably still say it's going to creep higher. It's going to continue moving. But as I said, that entry there at that 201.37, it's just not a favourable point because of how far it's already extended. Like it's already gone aggressively. Yeah, it could go 202, could go 203, but you'd be favouring buy side because of the momentum is still pretty firm, but to what degree is that going to continue?
So I'm going to go with the fact that I think this is the middle wave, and I think that we've had 3 higher highs, and all of these parts of the chart have all got my 5 subwaves in the impulsive bits. That's a potential turning point. I don't think the move's finished because there's still to be a 5th wave, but I think we're going to put a retracement in here, which relative to this whole move that we've just had. Yeah. And I'm looking for the 23.6 or 38 fib. So we've come from 192 to 201. 9. So I'm looking for a pullback to around, and this is a
197, 198.
197, 198. And that also is a big thing in my world. That's a previous 4th wave. Yeah. So those pullbacks tend to come to those levels.
Two things I've also noticed as well. On the upside here, it's come back down and pretty much held this top. So where this top is formed and the wick, it's pretty much not. I don't use support and resistance personally. I tend to look at, as I said, volume, liquidity, and the underlying volume in the order book. That for me is crucial. But you can obviously see the V, it's come back down. And this is obviously a trap short because obviously the V-shaped is trapping short sellers back into what you'd assume would be a deeper retrace into these lower regions, 192 to 195. But it's never done it. And from there, it's obviously gone. So yeah, there'll be a degree of trepidation taking longs here because of how far it's extended. Yeah. So the risk reward really isn't there, but at the same time, it could still go 202, 203 on a short-term breakout. So that's where then your 1 hour charts would probably be a little bit more, 15 minutes.
Let's get down to 15 because I'm immediately wanting to put a sell with a stop loss on this.
Yeah. So even that already, so you look at 15s, it's very, I think you mentioned it there earlier, nesting zigzag, breaks out, pulls back to the value area. So there's a lot of volume in here. You can see that. So again, that's a prime example of where I would be looking to buy. Accumulation, V-shape, breakout, apex back down, holds volume. You can even see it on the, I don't use the volume myself. I use the market profile, as I said before, but that would be a very interesting level to buy from and really looking for that to take out this short-term high, progress. Back down again.
I'd love to have the VWAP on this because it would definitely be trading through this.
Yeah, absolutely. Yeah, absolutely. And you can even see it here again when it extends back down. It takes the highs, initial move complete, back down, takes out all of this buy side volume or impetus in the markets, comes crashing down, takes out this low. So you'd actually probably find an awful lot of retail traders would be actually buying.
So we're talking about these here on the cursor.
Yeah, exactly, yeah.
Peaks in volume.
Peaks and troughs, yeah, absolutely.
Lining up with troughs in the market.
Yeah, and people would be looking, I guarantee there'd be a lot of retail orders in here.
So that's interesting, though, isn't it? That this sell-off as well, the break came on really low volume.
Came on really low volume, but also as well, it takes out that short-term area, and that wick would technically break, just about marginally break this low, which again would be a probability to start instigating short-term sellers, only to create the V back into the volume area again. Aggressive spike, like that's a hugely aggressive spike. So I'd say that's probably something fundamental.
See, to me, I'm looking at this and I'm going, no trade. I'm having no trade on this one just because
it's a mess.
It's a mess because there's a spike up and down.
Yeah.
So rather than having like a doji candle, you've got the opposite extreme. You've got two real
two pitch
It's almost like you've got two people moving their orders out of the way.
Exactly. Yeah.
Maybe there's Billy's mentioned it previously. That's classic news event there. The market's trying to make its mind up.
Yeah, obviously without knowing the times, which we don't, this does look somewhat fundamental driven, but also from the peaks and the troughs and those aggressive swings back and forth to take liquidity. That for me is market makers. Is accumulation of volume, stretching the order book out, tinning.
Well, it's normally that they've slotted the end of that order.
Exactly, and it's no coincidence that this move here takes these orders out, and this move back up takes the initial high out. So again, it's for me it's a no trade because it's just completely all over the place. But there's justifications for it to actually, as you said earlier, wanting to come lower because it's trapping on the upside. So yeah, it'll be interesting to see what the next move is. But I would not be confident on taking a buy trade there.
Because we can't actually zoom in there.
Yeah.
You're younger than me. Is the low before?
Yeah. So
the peak?
it's gone down. So you can actually see here it's gone down. It's trapped liquidity down here just above the 200 mark.
So we've consolidated there. Yeah. And we've gone to new highs.
And we've gone to new highs.
So
the probability is, the likelihood is, if we're to see the reputation of it over again, probably comes back down to this region on the shorter time frames. But you'd have to probably give yourself a little bit more time to see, does this area here at 201.25 actually hold up?
I'm not going to trade, but I actually think because of the way this is broken out and we've actually got some interest volume here, I think we've got a small retrace and it goes.
Yeah, it could.
So let's have a look, shall we?
Yeah, absolutely, yeah.
Small retrace.
Oh, that's aggressive.
Now it's gone.
Yeah. So again, the secondary move, if you saw that initially, the next very, very short-term move was, again, continuation higher. Yeah. So what that's done is it's exaggerated the book to the upside to
We've had a bit of everything.
Basically to suck in more buy-side volume on the momentum trade, because momentum traders, they're seeing that go, it's broken through. They're looking to that to go really extended, and it's just marginally gone above it, and then it's done the apex again. Apex up, back down to that volume area. And again,
I can only suggest the market wins on that one.
The market absolutely wins.
That's clearing everybody out both ways.
Yeah, that is prime time market maker moves, and you can even see on the next wave, it doesn't hold there. It takes out the previous lows. So we've extended to the upside, extended to the downside. So we've extended the book in both directions. So that is a classic market maker move. Yeah. And in that move, no one wins.
No, well, apart from Mr. Market Maker.
Yeah, Mr. Market Maker. That's the only one that wins in that move. Yeah.
Yeah. So just be aware. Sometimes you just can't actually trade that from a chart perspective. One, because you don't know the info, and two, you don't know where the orders are.
Yeah.
So you've got to accept sometimes that the market knows more than you do. Yeah. Which is why you've got to be careful. What we were saying, because that volatility, we just suggest if you've got to trade, make sure it's tight stops.
Well, I'm a big advocate that there's three trades in the markets. There's a buy trade, there's a sell trade, and there's a no trade.
There's no trade. That had no trade written all over it.
And that for me is a prime example of a no trade.
Where are we on the thing? And we're talking about that because of the extremity here, without knowing anything. Yeah, you just need to see where. And
there's a lot of aggressive moves back against the initial wave. So for here, there was an aggressive wave. It came back.
What about now? Even though we're not carrying on, what would you do now?
I would say that's going to go back into the volume area. So you look at your kind of, again, market profile will come in handy on the sessions, but you have a lot of volume there around 20040, 20050. Expect it to go back up. And it kind of finds more accumulation in that zone. Now, again, who's to say it'll happen?
What I'm saying as well, because we're pretty sure all of that to the high was the part of this move.
Yeah.
So now, because we've set new parameters, that's more or less telling you you're in a different
well, it's for me, that's accumulation. Takes highs, takes lows, which is stop hunting. It's just after the accumulation phase. So now you're really looking for the extension phase. So for me, that goes back into that volume area, probably accumulates again, tries to create a spike, and ultimately would probably go lower.
Okay. Unfortunately, we can't find out.
Unfortunately,
never mind. Let's have a look at next one. Right then, Jerry. Next one, we've got chart for Aussie dollar.
Okay.
The mining currency.
Mining is right. So obviously, again, consolidation, V-shaped or even a bottom formation, and then you've got three legs. You've got your first, your second, your third. So three extensions higher, takes the previous highs out.
Which is what I call five waves.
Five waves, but whatever. Yeah. Then it creates the top. and then it goes into a period of lateral accumulation. So you've got tops forming, bottoms forming, and pretty much moving laterally. So out of that, for me, I'm looking to see one, the volume, but I also want to see markets actually break from the region. So as in the previous one, we looked at the apexes, we looked at markets actually extracting highs or lows first before we actually see the extremity. So I want to see a little bit of manipulation. I want to see highs or lows been taken out to actually initiate a type of movement.
You're on the fence, Jerry. Come
I
on.
am. Unfortunately, I am, because unless it breaks either way, it's a 50-50 punt.
Okay.
And that for me is a very, very dangerous
So
play.
it's a vol trade, basically.
It's a
It could go
vol
either
trade,
way.
yeah.
So on the basis you're in the middle of that, you're not going to
Yeah.
do anything, are you?
No, well, until it breaks either zone.
Yeah.
And for me, it's like it's stuck in a 100-point range on a 4-hour candle over extremities of time.
So I don't think
Very
there's anything wrong with
difficult.
that. Do you want to put a trade on then? Are you actually going to put an order both
So
sides?
on the south side, what I would look for there is spike higher, come back down, and maybe like a marginal take of lows. So like what we had in GJ, where we spiked up and came back.
Go on,
up.
I'll be fair to you. I'll give you two
Yeah.
trades. You can put
Yeah,
you can
so
put a sell and a buy if you want.
Spike higher, break lows, come back up, extend lower, and come back down into this. Or on the inverse, create the V. And if we see that V, it's most likely going to try and go the other way.
So are you trading or not?
No, I wouldn't
You're
trade
not trading.
that. No,
Okay. So
I
to me,
wouldn't.
yeah, we put a low in. You've identified again the three swings.
But there's clear structure
Yeah,
in the
in my
decision-making
world, my
process.
structure, I still think that looks like it's the
Yeah.
longest wave in the middle. The initial move up.
15 minutes might give a different story. It might give you a
It might do.
shorter term
Just
day
look
trade.
at that.
Yeah.
Then again, we've had a three consolidation, another three consolidation, and the
Yeah.
fact we've got overlapping here,
Yeah.
that tends to happen at the front or the end of moves for me. So
Exactly.
that to me suggests
If
we've got
this-
3, and then a 5 down. I think we're going down before we go up.
Exactly. Now, the other point is, I would be bullish if this area here had to break to highs. So you've broken up, you've come back down to this area. If this had to create a high and come back down, I would be bullish because it's continuing to create the structural highs.
So
But because that hasn't created a new high, I'm wary of any more bullish progression on the buy side.
I hear you. I'm looking here crucially the fact we've got a lower low into the pattern there.
6,600. Yeah.
So I might actually change my mind there as a result because my eyes are only just focusing, and that rather than that could be an expanding flat in the middle as a complete and utter thing to discourage us. That means where you can get an
Pretty rubbish price action.
It's horrible price action because
Yeah.
there's no volume to it at all.
Yeah.
But we'll respect it in the first instance that could be the whole move done.
Yeah.
We're breaking up and nesting. I'm gonna have a small stakes just to be involved long here with what's that line there 65.80 as my stop loss.
Well,
just because I don't like the
gi-
fact that could really extend to downside.
Given the 4-hour trend is bullish, and that is a period of consolidation, you obviously have to stick with the initial trend, which is bullish. But for me, it would have been a clearer sight if that had to go higher and come back down, create an apex.
Let's
That for
have a
me would
look.
have been prime
So
time.
going into detail,
15 minutes. Okay, so
three,
again, apex up, down, accumulation, short-term rise, trough, back down, holding
right.
lows.
So that makes sense to me now. Of that lower, where's the lower low? Is it that one?
60, I think they're equal
Was it
lows
that one?
nearly.
Or was
I
that
think
or the
they're,
lower low?
well, that's a
Right.
wick, but they're pretty much equal
Right,
lows.
but because we've gone into more detail,
Mhm.
that to me should suggest 5 waves to downside. That always ends in 535 in my world. So, and we've actually broken to low. That is consolidation. So the lower details putting me completely off the trade that I suggested, and I'm actually going to put in I'm going to change that and have a stop loss trade for the breakout. What's that? 68, 60,
Yeah.
665, and I think we're going to break down to new lows. Right. So you trading? Or
No,
not? You're not
no,
trading.
that is absolutely awful.
Bang the
price
button.
action.
Let's see
Which,
if I get wiped out again.
press the button there.
So we're holding.
No,
at the
you've got an
moment.
inverse development as well.
Right, I've gone again.
Oh, it's gone up. Oh, and back down. So this is becoming a little bit more enticing. So you've got bottoms, breakaway, come back down. On the shorter time frames, you might actually get an entry there for long, for buying.
Yeah. So
But again, very difficult price action and not clean.
It's
by
terrible,
any stretch.
which is-
yeah,
so
it's as I said, it's a 50-50 punt.
So, as you,
Yeah.
even though we're waffling on here, guys, what you can tell from it is that it's not a slam dunk. Put the same thing on every trade,
No.
and really, we're moving you around to the fact that not having a trade on is a good thing. And as
Well,
Jerry says, it's
for
buy,
me-
sell or no trade.
For me, there, if you had to execute a trade, you're 0.5% or 1% down
Yeah,
on something that you haven't complete confirmation
absolutely. We're forcing trades.
of. Why are you forcing?
We're
That's
forcing trades
damaging.
because we're here trying to play bull bear.
Yeah,
but
it's damaging for psychology, and it's going to damage your account balance. So,
right then, Gerald, we've had a look at the yen already.
mhm.
We're now on the big boy, the UJ, the carry trade.
Yeah.
What do you think?
So I would look at this aggressive spike, tops, and then from there we've had that kind of grinder correction back up in before breaking,
Left.
and we have accumulated again. False break, lower high, break of structure to the downside. So for me, I'd be looking at selling opportunities around that 157, 157.20, stop loss above, and then obviously looking for sell side. And that would be on the provision that with a bit of degree of risk, because you have that massive wick over here. So that would be a risk. But if with a good risk management, 0.5%, 1% risk, it's an opportunity probably worth taking.
Yeah, I'm kind of leaning your way. Again, you said we've had breakout, we've had a three-wave consolidation, we've had a strong three-wave pattern which has given way,
Mm-hmm.
and we've definitely got what's looking like the orders moving down. The sell orders
Yeah.
are getting more aggressive,
Yeah.
and I think this is back to my old nesting. We might have another little challenge of this area. I don't
Yeah.
think that'll break.
Yeah.
Gonna sell, but again, I'm going to have stop
I'd
loss
like-
just above here because it's there's the potential that this, because it's such a strong three-wave and we've had
yeah.
the interlow volume, that has been a change of trend short term.
Mm-hmm. Mm-hmm.
That has got the potential to suddenly have cleared the sellers out.
Yeah.
So
Because
I want a tight stop loss on that.
yeah, I'd also go with the tight stop loss as well, because if it does
So we're
break,
talking
yeah,
in these peaks here.
exactly, yeah. So where you've cursor there, if
I'm
it-
going 158.
yeah, you could even maybe have it a little bit less, maybe
Yeah.
157.80. But the logical view that if it does take out those highs, it's probably going to try and fill this
Yeah, I
massive
think
wick,
that's the big
and
danger.
it's going to go from 158 to 160.
Bang the button. Let's have a look. Oh, we've got the 15. Let's have a look at 15. Anything to change our mind?
Yeah. So again, laterals. There was initial apex extension, kind of like a video or a chart that we looked at recently. It's come back down, equal lows, breaks through, formulating short-term bottoms, back up into this 157.20. Nice little volume range there. Looking just at pure naked chart view, I would look for orders, sells up in this region. And,
Yeah, I mean, definitely on the
just
short
dump
term,
off.
impulse down,
Yeah,
5 valid waves. I think that's
correction,
at
short-term
least
correction.
to finish it. Yeah.
Yeah.
And to me, that looks like zigzag, which is 535
Yeah.
again. So, it's all about your staking. We've said
Yeah.
before, because you move down to the lower time frame,
I would,
don't
yeah.
get crazy with these
No, you
tick
don't.
sizes.
Yeah, I'd look at it. I'd put in a price alert of 157, and then I'd look at the volume between 157 and 157.30 with a view to entry. Stops above the highs.
So you're not going to enter here. You're going to put in a limit order.
Yeah, I'd put in a limit order, wait till it gets back up, because you're looking for shorts now. So there's no point trying to buy into a short position because you don't know how quick.
So I
or
think
how
that's
deep-
great. I think that's absolutely great, and it's something
Yeah.
that we both have. We both told
Yeah.
people on risk management. You haven't got to trade all the time. You use
Yeah.
the limit order, and then you don't get your slippage. You get the levels you want,
I'm
and you've identified
yeah,
it from the chart.
But I'm also a big advocate of letting the markets come to you.
Yep.
Don't try and chase the markets where it's an inefficient entry point. Let the markets come to you, and then you're getting on you're entering on your terms.
So the way I'd set my entry up on this is we've got a consolidation which should have 3 legs,
Yeah.
and the third leg should be equal legs to the first one.
Yeah.
But 1.618 fib extension.
Mm-hmm.
If it goes beyond that, you've probably got something different. So I'm
Yeah.
putting in around 1.618 of that. That takes us up to probably 156.60. I'll have a limit order in there just below you.
I'd probably go a little bit higher. I'd be looking at 157, 157.25.
Yeah, well, let's
Yeah,
see what happens.
let's see what happens. I could be wrong. Yeah, absolutely.
So it's ticked down. Is it? No, we've gone up. We've gone up.
So it's going the initial way that you'd like.
Yeah, not being hit yet. 156.60, and it's done.
Yeah, it didn't even get there. Oh, you were. Neither of us were in on the limit. Yeah,
Which is
so-
annoying because I've got to put
Yeah.
that as my what I should really do is have a stop loss at 156.60.
Yeah,
Because that's the same thing as the entry.
certainly. Yeah. Okay.
So
yeah.
what I probably would do if I was trading properly, I would have a very small lot as the trade with a
Yeah.
stop loss at there,
Yeah.
and probably a limit order a bit higher to get
Yeah.
a second entry.
If you really want to be aggressive, now again, I'm not an aggressive style of trader, but the fact that it's gone up and it's come back down again, retest into this short-term area here, and then it's rejected. So there might have been an entry there, but again, it's retrospective. So everything is 2020s when it's retrospective, you know.
So again,
Hindsight.
that came out perfectly for me because we had a
Yeah.
three-wave consolidation, And then we've now
Yeah.
had another 3-wave down, which
Yeah.
guarantees you're going to finish off with that up leg.
Yeah. But for me, the fact,
Looking, and for me, but look at you, if I'm just looking, I'm looking for 5 little waves, and you've got 5 little waves.
yeah,
In fact, if I was watching that play out, I'd be looking to enter definitely because that structure, the 3-3-5,
yeah,
is a
I can see that,
consolidation
yeah.
to me.
Yeah.
So,
It's quite frustrating though that this initial break there was never any sort of reaccumulation.
Retracement of it,
Yeah,
yeah.
it just kind of there was a short-term hold, probably over a day session into an Asia session, and then broke down the following day. That's exactly what's happened there, I would imagine.
we actually have gone.
Yeah.
That has gone into the Asia session.
Yeah,
So
and you
it's
can
whether-
actually see it there. It's
That's
broken
probably the actual sellers moved their order overnight.
down. Yeah, yeah. Which
Brilliant.
is,
Well,
yeah, it's.
Did you enjoy that, Jerry?
I did. Yeah, it was good. Yeah,
that is great.
but
So,
it's a testament that not every trading position is clean, and you have to do it on your terms, which is important.
so obviously, I've not made much money today, but I've had the right ideas and I've saved money. I'm still in the game. I've lost for the right reasons. So I'm
Yeah.
back. I'm back next week. Jerry's not even traded. Jerry's back next week.
My orders weren't filled.
Orders weren't filled, but you've got to live with that, and
Yeah.
that's what happens in
Yeah.
the real world. And
Yeah.
you've got to be patient, and you get the right fills, you get the right performance.
Yeah.
Hope you enjoyed that. Any questions, bang them down below. We'll get back to you, and I hope you enjoyed it. Hoping to see you on another edition of Bulls versus Bears.